Hello, everyone. Welcome, and thank you for participating today. If there is anyone in the room that doesn't know who I am, my name is Deb Beto, and I am the founder and CEO of Your Ops Manager. We are an outsourced operations manager for companies with less than 50 employees. And with that, let's get started. So I'm going to do a lot of screen sharing today. And so I'm going to stop my video here and get you on the screen here and ready to go. So today I'm just going to be doing a very quick tutorial for one way to perform the accounting functions for your PPP loan. There are several ways to skin a cat. This is just one way. A lot of companies are opting to open a second bank account and then transferring the money as soon as they spend the money. But oh my gosh, going into a bank and opening another account right now just does not sound like a fun task to do, especially since your accounting system should be able to handle this pretty easily. And I think that a lot of people just have a fear thinking that the accounting would be too complex without a separate account. So I hope to take some of that fear away today. So I'm going to share my screen with a company that I have set up for this purpose called The Best Business Ever. So this company, if we look at the check register, has already written a bunch of checks for their utilities and their mortgage and their payroll. And that's all great, because what I want to stress is that you should be writing those checks just like you normally would. The only thing you have to do differently is add 2 extra lines per check. And if you do it consistently with any PPP forgiveness category, you will be good. So the first thing you need to do, let's go here, is understand what your PPP categories are. So here is the list, which you're probably well aware of by now. Don't feel like you need to write these down, because I will be sending a link for how to access a video of this session after we leave the meeting today. So you can always access this video at a later time and get a copy of this PowerPoint presentation. So let's go back to PPP Company and let's take a look at some examples of checks that the best company ever has already written. If I look at the check register, I can pull up a check written to their mortgage lender. You have the total check amount split between principal and interest. Perfect. Now here is a check payable to SDG&E. $87.99 went to utilities. Perfect. Here is an equipment loan. And what you should notice is that all of these checks that have already been written are reflecting the correct accounts that they would normally go to. Nothing new and nothing to be fearful of so far. So before we add our PPP accounting to these checks, let's see, before we add our PPP accounting to these checks, we are going to need to set up 2 other accounts. But before we do that, let's take a look at our balance sheet and P&L for the best company ever, just so we can get a before and after. So I'm going to run a report here for the profit and loss for this year to date. Let's do it through today. And we can see that we've got consulting income and interest expense, and we've got wages and an ER match and telephone expense and utilities. So I have already shared this P&L in our PowerPoint deck here, right here. So this reflects exactly what we're seeing in QuickBooks right now. And this is the before that's already in our PowerPoint presentation. So going back to the best company ever, let's do the same thing. And I'm going to want to view my open windows list. Let's do the same thing for our profit and our balance sheet. So our balance sheet today is showing a checking account balance we've got an accounts payable, we have a building loan, we have health insurance premiums that are payable, an EE payroll tax, employee portion of payroll taxes payable, simple IRA liability, our equipment loan. This is a pretty typical balance sheet. So again, I have already done a screenshot of our balance sheet in our PowerPoint presentation. So this reflects exactly what we just saw on our balance sheet. So the first thing that we need to do is add two accounts to the chart of accounts. The first account is a liability account called PPP loan payable. And the second account is an other income account called PPP loan forgiveness. So let's go back into QuickBooks and add these two accounts. So pretty easy. We're just going to go into lists and chart of accounts. And you can either come down here and add new, or you can notice that Control N does the same thing. So if we're going to add a new account, and it's going to be a loan account, and it's going to be called PPP loan payable. Oops. And we'll do another one for an other income account called PPP loan forgiveness. And we'll save and close. So that added our two accounts. So now that those two accounts are set up, we're ready to go. The first thing we need to do is to book your loan according to the amount and date that the funds showed up in your bank account. So in this case here, the best company ever got $65,000 on April 28th. So we're going to use our record deposits module to get this money into the bank account. You can also use a journal entry, but most non-accountants have a fear of journal entries. So we will just use the record deposits module. And if you want to include a memo here, you can. So we're just going to say that this is our PPP loan. And if we want to include a memo, we can. And we got $65,000. So now if we look at our balance sheet, we can see our PPP loan payable here for now $65,000. So we've already seen that the best business ever has already processed payroll and made some payments after the PPP loan arrived. So how do we get those transactions in line with our PPP loan? Here's what we're going to do. We're going to go to our checking register and find our PPP loan date, which is, we needed to change the date to 4/28. My mistake. We got it on 4/28. So here's where our PPP loan started. So everything after this should be able to be part of the PPP loan forgiveness if it's part of the right PPP loan forgiveness categories. So let's look at the first transaction. This is an income account, which doesn't really count. So let's look at this transaction. This is an employee wage for an employee who has no benefits. So in this case, the gross wages are PPP forgivable. So we're just going to add two line items. The first line item is going to be a positive number, which is the PPP loan payable for the gross loan or the gross wage amount. And our second line is going to be the PPP loan forgiveness for the negative gross wage amount. Notice it doesn't change our check amount at all. We have a positive and a negative, so it didn't affect anything else. So we're going to save and close this. And now when we go and look at our balance sheet, we can see that our PPP loan payable has decreased by that same amount, $1,073.70. And if we go look at our profit and loss statement, we see that nothing on this has changed. Even our gross wages hasn't changed. The only thing that's changed is this amount down here called other income PPP loan forgiveness. And I am going to, in just a few minutes, I'll tell you how that loan forgiveness affects your bottom line. But It's just pretty simple. Every single transaction that has an expense that can be recognized as a forgivable expense under the PPP loan will simply get 2 additional lines added. The first line is a positive number to PPP loan payable, and the second line is a negative number to PPP loan forgiveness. So we can continue to go through the checks one by one, or we can just refer to our P&L here to look at the forgivable categories. So if I change my dates to 4/28/20, because I want it to be everything after my loan funded, you see interest expense is a forgivable category. So if we come into here, choose the first one, our interest expense is 115/20. So PPP loan is a positive number and PPP loan forgiveness is a negative number. Do our second one. We've got our building loan and our interest expense. Our building loan is principal, so we cannot deduct the principal from our PPP loan forgiveness. We can only do the interest, so PPP loan forgiveness. Let's see what other categories we might have. Employer disability insurance. So when it comes to group health insurance, disability insurance like AFLAC is not deductible. So we're not going to do anything with that category. Employer portion of health insurance is most definitely group health insurance. So let's take a look at this expense. In this case, the employee portion that came from their paychecks was $150. The employer portion is $450. So that is the portion that's forgivable. So we will do a line for the payable of $450 and a line for the forgiveness of a negative $450, and it's done. So that category is done. The simple IRA match, the employer portion of the simple IRA match is most definitely forgivable. So let's go in there and do that one. So this happens to be a payroll check for an employee that has gross wages, and the gross wages are forgivable. So let's do that one first. So we're going to do the PPP loan payable of $3687.50. and a PPP loan forgiveness of the negative, and then a PPP loan payable for the employer portion of the simple IRA match right here. So it's $110.82, and the PPP loan forgiveness is the negative $110.82. Now the reason we're not doing the employee portion of the simple IRA is because it's already included in gross wages. So it's a deduction from their gross wages, so it's already included in gross wages. So the employer portion is what's deductible. So we've got that one. And now we come to the gross wages line. So in this case, we have 4 different types of employees. Our first one is that we have an employee that's not using benefits, and we've already seen that this was the first transaction that we recorded. So we've got both our positive and negative. Our second one is the one that we just did with the simple IRA. Our next employee is an employee that only uses the ancillary benefits. So like an AFLAC. This is not taxable to the employee, so this is just a deduction from the employer expense, but even the employer part of it is not deductible because only group health insurance, like medical, dental, vision, not the disability insurance. So that leaves us with our fourth and final, which we've already allocated the group health employee check. So just by going through those other categories first, we caught it all. The only thing that we haven't done on these is, let's just go back and make sure that we've done the gross wages on all of these. All right, that gross wage was done. This gross wage for $3687.50 is done. This gross wage needs to be done. So the PPP loan for $1430 and the PPP loan forgiveness for $1430. And our last one is gross wages PPP loan $1450.80 and PPP loan forgiveness of $1450.80. So there's our There. Next we have our telephone expense. And again, it's recorded as normal. This is a bill yet that has not yet been paid, but since we entered the bill, we're going to enter those same two lines even on our bills. 9119 for telephone, oops. And a negative 9119 for our telephone. So even though the check's not been written, once the check is written, it will be recorded properly on the profit and loss and balance sheet. And see if we have any others. We do have utilities. So there's one utility check. So there's a PPP loan for $87.99 and a, oops. And a PPP forgiveness for $87.99. So I hope that you're seeing that this is getting very repetitive. It's just 2 lines for every transaction. And then when we're done posting our transactions, it might be a good idea to run a balance sheet the day prior to our loan funding, just to make sure we didn't change any transactions that were prior to our loan funding. So if we go to our balance sheet, and we change our date to the day before our loan funded, we can see that there is nothing in PPP loans. So we're good. We didn't, that's just kind of a double check. So now if we take a look at our balance sheet, let's see if I can put this side by side with our balance sheet that we looked at earlier. I might not be able to, let's see. So our balance sheet earlier had 9119, 455, 600, and now our balance sheet, here we go. The only thing that's changed, oh my goodness. I ran a different balance sheet. I ran this at I ran this one yesterday. I think I made some transactions to this account. So that's not a very good example, but what I want you to notice is that the only thing that really changed on here is our, oh, that's why. This should be today. Okay, so now if we take a look at it in comparison. Having trouble driving here. Now if we look at it in comparison, our bank balance is different, but everything else is the same, except for on our new one, we have this PPP loan, and our bank balance is different by the exact same amount as our PPP loan, because the only thing that should be changing here is that we've got a PPP loan, and our bank balance has increased because of that. By the same token, if we go ahead and take a look at our profit and loss statement through today and compare that to what we saw earlier, then we see that our income is still the same, our interest expense is still the same, all of our other expenses are still the same. The only thing that is different is that we have this other income account called PPP forgiveness. So what does that mean? You can expect the profitability of your company to go up by the amount of your PPP loan, which means that you will be paying taxes on that profitability. And make no bones about it, we are all going to be taxed on all of these government subsidies. So be sure to talk to your tax advisor regarding estimated taxes and year-end tax planning. And what I really want you to notice is that for the purposes of being able to analyze your business trends, the way that we have recorded these transactions is only affecting your P&L on this one line. We haven't lost the ability to track our utility expense trends or telephone expense trends, or most importantly, your wage trends. If you are keeping track of all of these trends for managerial purposes, you will still be able to manage the analysis because the P&L is only affected through this one PPP loan forgiveness line. So I hope that you have learned something today. I'm gonna take back control here. I hope that you've learned something today, and I'm going to now come down to the Q&A and see if anybody has any questions, because we do have a few minutes before we end. But if you have questions after this is over, please feel free to email me at training@yourcompliancemanager.com regarding this or any other questions. And if you notice that in our session today, we did not go over, you know, how to stay in compliance with all of the ratios that the PPP loan recommends. If everybody wants to do that type of webinar, we can do that. But my purpose today was just to simplify the accounting for you. So if you don't have any questions, I'll stay on the line and look for questions. Otherwise, I will wish you all a great day, and thank you very much for your participation.